Hey, what is going on, guys? It is Easy. It is October 14th, 2017, and it is 10:46 p.m. Pretty late in the night, not too much, but we have some big earnings coming out this week. Something I'll be paying attention to is Netflix. Netflix is reporting earnings on the 16th, the Monday of October, so October 16th, and they will be having a earnings call on the 5th. On 5 p.m. And then they will be reporting earnings on market close, so the aftermarket, usually right after the market closes, so it'll be about a minute or two into it. So what I like to take a look at here is the Netflix calls and puts, and what will happen is we could see that it's very bullish on the calls. We could tell here we have a 7.85 here on the ask, and we have a 7.05 on the ask for the puts. Calls are 7.85 and the puts are 7.05. And we could definitely tell that these puts here are most likely going to get drained up. Now, if we look here at the volume, we only have 1,300 puts. And if we look here at the volume on the calls, we have 7,200 calls traded. And we could also really look at here. We look here at 1, 2, 3 places from the in the money. We have 5,000. And we look here, 1, 2, 3, and we only have 1,400 traded. And to be honest, these puts right here are basically, from what people are thinking, is that these right here are going to expire worthless. There's a 52% chance probability of being out of the money, and there's only a 51% chance of being out of the money on the calls. So this right here can sort of signal a bullish move on Netflix. Now if we do take a look here at Netflix, which I will pop up a chart, looks like they got rid of, okay, this is not what I was hoping for. I was hoping for a chart, but that's fine. I think here I can get a chart. There we go. Okay, I guess they took it off of futures and active trader. So if we throw up a 20-day chart here, we could definitely tell we did hit that high of 200.82, and now we're close to it at 199.49, and we have the spreads of 199.97 on the sell and a buy of 200.15 on the buy side. So not too big of a gap, which looks like here we're close at 49 here, then we got all the way up to 97. I think if we were just to take a look, we have a nice uptrend, we could see a downtrend. Now, the reason why I'm saying this is because I'm sort of using logic here. What goes up must come down. But in this case, that sort of can be true and sort of can be disproven when it comes to markets rallying and whatnot. Now, one of the things that the earnings for Netflix really relies on is subscriber growth. If they look at that subscriber number and they notice that it's lower than what they expected, or if it's lower from the past earnings, well, not earnings, but the past subscriber growth, we could definitely tell that, maybe Netflix is slowing down and we could see a reversal. Now the last earnings, we'll throw up here 180-day charts, and we'll look here at the past earnings and what that catalyst was. So if we look here at the day of earnings, we had that low of 158.42, and then we went all the way up to 179. So that right there here was a really big increase. That was almost a 30-point gain. I think less than 30. Like, I would just round it to about 25-point gain. Now if you look here at today's chart, actually, you know what? Let's do the math here. Okay, so what I did here is, let's say Netflix were to drop 25 points. Okay, so this right here could actually come really in handy. So let's say it does drop 25 points and it goes all the way to 174. We could tell here that these 175 calls and puts are trading at over the counter at 0.73. Now it does have a 90% chance of expiring out of the money. Now I'm using this right here from the past 180 days of earnings for Netflix. So let's see here. Let's look at the last earnings and what that was sort of a catalyst. So we had this 139 went all the way up to 149. So that right there was a 20-point gain. Now I'm just gonna throw up here. Let's do a 10-year chart. So basically what I'm trying to see is I'm trying to see like an average of what Netflix does. So we go from 159 all the way up to 185. I think that's actually a little bit incorrect. Yeah, okay. Well, that's a day after. So let's say here it does have a 25-point, So this right here went from 98 all the way up to 119. So usually we're looking at 25 to 30-point gains, and we could see a pullback. I mean, just looking at this 10-year chart, we could definitely see an increase. Now, if we sort of look, now I'm just going to clear the drawing set here. If we look at this, graphically, we could see we have a bounce up, and then we sort of pull back, and then we have a bounce up, we pull back here. We have actually reached above this level, this high, so this right here could spark a major uptrend. Since we have surpassed this high, so to speak, in this study, it could be showing statistically that we will be having a surge in exponential growth. Now this really relies on the subscriber growth and what we could see with it. Most likely the numbers will be good, but we look here to the what are these right here, the 202 calls. They were trading at 6.60. Now when it starts to get a little bit below the ones, we get here to 0.75. That's at 230. Now that right there is probably a stretch, since statistically speaking we get like 25 to 30-point gains on earnings. If we look here, so let's go from 200, we go to 225 maybe. This right here seems a little bit more realistic. Only 950. Now what really sparks my interest here is this 212. Okay, these right here trade at 3.25. There's only 415 contracts. We can sort of see this gap: 7,000, 1,000, 5,000, 1,000, 3,000. But there's only 415 contracts traded on the 212 for the 20th of October. Now if we look over here, 1,000, 2,000, 1,000, 3,000, 1,000. So we could definitely tell this right here also has a gap. These 182 puts, only 394 contracts were actually traded on that. So that right there sort of has that gap, which I just kind of find a little bit weird, but it really just doesn't spark anything new. In the flip side, I think most likely earnings will be good. Subscriber growth will be good. These right here only have a 70% chance of expiring out of the money. No, my apologies. Only a 51% chance, so it's kind of a flip-flop. That's where it becomes sort of a projection into where this could go. Now this right here is definitely a flip-flop. If it's only 51%, your odds are sort of against you. But if you go more in the money here, trading at 9, So one contract is going to be $90. If you trade 10 contracts, actually no, it's going to be $900. There we go. So one contract is going to be $900. You can see here it's only 46% chance. Your odds are greater now. You're basically, gonna do good. 41% chance. Your odds are again in your favor. Over here at the puts now, if we look here at this out of the money, we got a 47% chance of being out of the money, and we have a 46% chance of being out of the money. So it does look like that the bulls do have it here. The puts will probably get killed. I could be wrong though, so do not take my advice. As Netflix is very, very, very predictable here on earnings with subscriber growth. I mean, throw up here a 10-year chart, we could definitely see that it has been a rally and it has been an outcry for Netflix. It is soaring up to all-time highs. Yesterday, yesterday, Saturday, we did reach an all-time high, reaching 200.82 in Netflix. Well, guys, that concludes my take on Netflix and what I think here will probably happen and what is going on here in the options market for Netflix. Thank you so much for watching and have yourselves a good one.